Oil prices hit a 6-week high as the Organization of the Petroleum Exporting Countries warned about a possible deficit in oil supply that can already be observed in some regions. This shortage has a local and short-term nature and means that buyers cannot receive the required volumes immediately and have to wait for a few days. The thing is that oil-producing countries did not have the time to ramp up production to the required level, and this is a pure technical issue. According to OPEC, this situation can persist for some time and even up to the year end. This prolonged decline in crude supplies pushes the prices higher. At the same time, this factor has already been priced in by the markets. Therefore, oil is unlikely to grow further. The oil market is expected to consolidate near the current levels. Brent crude has reached the level of early August after trading in a sideways channel between $70.50 and $73.50 per barrel for quite a long time. Brent was able to break through its upper boundary. If the uptrend continues, Brent may well head towards the range of $75.40 to $76 a barrel. As we can see on the charts, WTI crude is trading in a similar way. Yesterday, the quote broke above the upper boundary of the sideways channel between $67 and $70.60 a barrel. If the price keeps rising, the bulls may push WTI higher to the area between $72 and $73.50 a barrel. Higher oil prices typically support the Russian ruble, so against this backdrop, the ruble stopped its fall against the US dollar. For the third time in a row, the pair has found support between 72.50 and 72.70 rubles per dollar. After this, the volume of short positions started to decrease and the quotes naturally declined. If the pair fails to hold below the level of 72.50, we can assume that the price can make a rebound to the upside. As for the euro versus the ruble pair, it has fallen to the level of 85.80. This is where the trend reversal is possible. In the near term, the pair will be trading in the channel between 85.70 and 85.90. If the quote does not settle below the 85.70 level, this will most likely result in a pullback. Unlike many other currencies, the ruble opened yesterday's session with an uptrend. It continued to rise throughout the day, showing notable growth. The reason for this was a rally in oil prices. The correlation is obvious here. However, a further uptrend is limited for oil. This means that the ruble will again be influenced by the overall tendency in the foreign exchange market. Given that today's data on US inflation may spur the demand for the US dollar, the Russian currency is set for a further decline. What's more, it has already started to lose ground. And that's all for now. Thank you for watching and stay tuned.